Thank you for letting me know, brother. music is kind of just the waiting music, so it's not dead silent with me making sure everything's set up while I get things rolling here. But all good, man. So gonna give it a minute, man. Gonna make sure I got my charts set up straight and my trade ovate over on the side. That looks good. Looks good. Let's see. I want to get 2:54 p.m. Eastern, running a little bit behind, but we'll make it happen. And if there's any opportunity, and if there's not, we'll run a little educational session. I have people asking me the same questions over and over again, so we'll talk about it, make a video about it, and maybe that will be helpful. Let's see. Cool, man. Do I trade during the afternoon? Yeah, man, welcome on. I trade every morning for NYSE, New York Stock Exchange session open, marked by this line right here, 9:30 a.m. Eastern. I trade the U.S. indices. I have been trading NQ, NASDAQ primarily for a while. I've since been looking at the S&P, ES, right down here. But I will typically also trade. I'll trade the morning for, NYSE opens 9:30. Maybe I get some trades entered around 9:40, 9:50 is probably the earliest I start taking trades. After that, I'll trade for about an hour or so, and then I'll be looking at power hour for coming back on, which would be the last hour of NYSE session. You get quite a bit of info that comes in, some volatility like we see right now coming into this 3 o'clock time frame. We're just going to continue this run up is what it looks like on ES here. So I'm a little late to the party. If I wanted to be buying a breakout, maybe this would have been it right here. But ooh, yeah, we're going to push, man. But yeah, I'll do mainly for the free stuff, man. You'll catch it in the afternoon. Yesterday was earlier in the day. I'm kind of working through new schedule with doing everything through Discord and almost everything for free. So I'll probably be doing afternoon sessions live on YouTube with the Discord community, with everybody really. Morning session, I really like to focus up myself and not be too distracted answering questions and talking to people. So I've got that set for the one program that I have running, the accelerator program, where I'll take a small group, work with them intensively, trading live through Zoom multiple times a day, really doing educational sessions, one-on-one sessions, working through everything that goes into profitable trading. But you really don't even have to worry about that if you're just getting started, man. I'm going to put everything out for free. Live trading, educational sessions, community, ability to talk to me. If you want to fast track it and you want intensive help from me, that's going to be the program. In Discord, I got a way you could book a 30-minute free call. We could talk about your trading, answer some trading questions, and then see if getting some more help makes sense, if you're a good fit for that program. But I've got my charts opened up here. If you're just jumping on, what's up? Going to be looking at ES. I'm so used to saying NQ. Going to be looking at ES here for the last hour of NYSE session. We're coming up on 3 o'clock. That usually does generate some volatility. I'll take a peek at NQ now that I said it. Yeah, really similar price action. A really similar structure, I should say, but just much bigger structure and price action, much choppier. Trading ES is a lot more of an adjustment than I honestly thought it would be. It just doesn't get these big wicky movements. You don't get the huge pullbacks. It's actually really nice. It trends really tightly. A lot less volatile on the 5-minute that I've been trying to move up to. From the 1 minute, it's like watching paint dry. So maybe making the change from NQ 1 minute, I should stay on the ES 1 minute. But again, the charts are just broken out to be a little bit faster. We're looking at the same thing. We're looking at the same data, just displayed in a little bit different way. But yeah, we see you just get these really, really tight trending movements where if you jump over to NQ, it's just much wickier, whippy stuff. These big moves. I'm not saying you won't see that on ES, but man, I've been kind of too conservative. I feel like trading ES from an entry and trade management and risk management approach. Really, it's a lot smoother feeling, a lot slower, which is good. That's what I was looking for, really. Anyway, we're gonna go ahead and get ready to see what we got. Let's open up this chart. Let's jump out to the 1 hour to see where we're at. Some top-down analysis. If we get super zoomed out, if you don't live under a rock, you may know what's been going on with the U.S. indices. They've been on a tear, a big tear up. Since early this year, we've had this big correction down, and now we've been rallying back up pretty aggressively this month. I think this is the beginning. Yeah, here's May. Really aggressively this month. Like here was the start of it in April, but we had some really big pullbacks and down days in here. Obviously, it's the 1 hour, so this is large price movement. Into May, we've just really seen this big push up. It looked like we were going to see, we had a little head and shoulders type of pattern. A lot of guys calling out bearish movement that was coming up. When we just didn't get that today at all. Price pushed up in pre-market, as you can see here, and it just continued the move all the way through now. Very, very bullish movement. So again, a little bit of a higher time frame view there. As you can see, the way I mark my charts very briefly, I'll try not to do this on every live because it just gets really repetitive. I'll mark out zones. You can call them support and resistance, order blocks, supply and demand, whatever you want. I'm taking the highs and lows off of market structure. Mainly, I'm looking at impulsive movements. I'm making note of areas of interest that I've seen price consolidate, and then a bullish or bearish move. I'm also looking at the next low in the market structure to the left, or the next high to the market structure to the left, that price may be approaching. So if we look at this zone that I've got marked out here, just for example, I drop down to the 15-minute. Here's where I marked the zone. Why did I pick this area here? I could have marked out one right here above price action. This was a high that was put in. I chose this area, this consolidation right here, this area of price action, a lot of volume traded, and then a nice impulsive move on an even higher time frame. You can see the more drastic impulsive move that came off of this level here. Next zone up here, I could have put this in one large zone. I chose to break it up. Again, it's discretionary, but that's how I mark my zones, my areas of interest. Horizontal levels, no magic, nothing really, really crazy or special. Just what I find that works for me. For my pre-market markup, I'll take the prior day high and low. I got them labeled over here, high wick and low wick, prior day high and low, just looking at the daily chart. And then I'll mark out pre-market high. I'll go back to, I didn't even catch pre-market high on this one. What the hell did I do here? Oh, that's right. I was trading off Top Step X this morning, so this isn't even updated. That'll help. Let's see what I have correct on here. So we got prior day low, prior day high, pre-market high and low, look off. So what I do is I'll mark out the 9:30 open. I'll go back in time, maybe about till about 1, 2 a.m. I don't like to go too much further than that. And I'll mark out the pre-market low. I will take a line right here and mark it out. Boom. That would be pre-market low from this morning. Here, am I on the right chart? Yeah, ES. Now I got nervous about it. And this would be my pre-market high. This would be yesterday, so that's back too far in time. Just the area that price action is trading, the range before the 9:30 a.m. open. I'll mark that out. The other things I got sitting on this chart here are VWAP, and then I used a anchored VWAP. Just through backtesting on the ES, I've had VWAP on the whole time, and I've noticed really, really interesting, just the way you see price respect it, the way it seems to really, follow the trend. If it is, prices above that VWAP, the daily VWAP, which is just the general indicator that you could pick from TradingView, it really does seem to respect it pretty heavily. I've messed around with anchored VWAP. again, which is just anchored at the beginning of the session. You could use this a number of different ways. It's a drawing tool on the side here. You anchor it from whatever area you want, and then it's just another tool to be used. I don't like to have too much stuff on my charts. As you can see, my charts are pretty naked outside of these two tools that are new for me, and my horizontal levels. If you've been watching my lives, you'll see I cycle through different tools. I'm always looking for something, and I usually just don't keep it. I had delta and cumulative delta. I had a session volume profile displaying volume in a certain way. I've kind of swapped that out for my volume footprint chart over here. That kind of gives me the volume that I want to look at, and then I display this a lot larger on another screen so I could see delta within each candle. Again, still testing the reliability and comparing it against other people's delta and data. I don't know if this is super accurate data from TradingView. It's new from them. You can see it says new and beta, so we'll see. But again, I don't know if I'm going to keep VWAP on for a long period of time. I don't make trading decisions solely off this or really use them too strongly in my trading decisions. But if there's something on the chart that is a tool that's displaying data in a little bit different of a way, especially volume, that I've been really enjoying paying more attention to in the futures market with this reliable volume that was not available to me in Forex, I want to experiment with it, But as a whole, I'm trading market structure and price action, really raw market structure and price action, and then I'm filtering in a little bit of volume and order flow data. That's been useful to me. I'll look at multiple time frames like you've seen me do. My typical trading time frames between the 1 minute and the 5 minute. Usually don't go above or below that. And I will take, I like to take break and retest trades. I like to trade with the trend if at all possible. Really just find a good way to structure risk and a good entry point. I'll take breakout trades. I will, trade counter trends sometimes. I have a bunch of different things that I look for in a setup. Again, discretionary. So, you can hold my feet to the fire on anything and I'll tell you, yeah, man, intuition was telling me to enter. And I found a good way to structure risk, and that was enough for me. I find applying intuition and your experience in the markets is really a key to trading profitably. So this right now, this felt like really overextended early on. I had a nice buy trade here early on this morning on the 1 minute. I'd have to go on to Top Step X to know exactly where I took the trade, but it played out really, really nicely. I didn't hold it as long as I would have liked to. It ran quite a bit further, but ended up like over a 3-to-1 for the initial trade. It's kind of low risk. Again, getting comfortable on ES. That was just one of those times where I had on too little risk. It was the first trade of the day, but I should have been double the size. It would have played out, obviously, as double the profit, but worked out okay on the 50K account. And then I just got chopped around here towards the top, trying to figure out if this was going to continue its push up. I was taking sells, and I was just too early. I was getting chopped around with this crap, and I didn't catch this move back down to this nicely respected anchored VWAP. Or potentially could have been VWAP itself. If you look at this stuff on NQ, you see really similar price action. The way that it tends to respect VWAP, especially early in the day. Later in the day, this seems to lag even more and just become less reliable. But definitely early on in the session, if you're using the session one, and then the anchored VWAP, once we get through the morning crazy price action, maybe it's something that I keep on the charts for a while. So far, this one's been the longest lasting, this VWAP. I'm a pretty harsh critic. I really don't like indicators or much of anything on my chart. But yeah, that's pretty much where we're at. So I wrapped it up somewhere around here after getting frustrated, taking some break-even trades, and called it a day. I'm on another Top Step eval. I got a handful that I still have with Tradovate. So this is, again, Tradovate integrated with TradingView. I like Top Step X. I'll be probably taking advantage of that discount that's going on. If you guys don't know about that, they have a new platform that's out. It's their own platform, Top Step X. Crazy discount, $19 to start the 50K account challenge. So this is a 50K account. It's in profit. No trades for the day on this account. It's in profit by $860. So a little bit of profit on that. on the 50K, you don't need a lot. You got to get to 3K without hitting your $2,000 max drawdown. So, you don't have to hit home runs. We had guys posting in Discord looking at, $500 profit, calling it base hits and stuff. To me, that's a really nice size trade on a 50K account. That's solid. You can daisy chain accounts together and amplify that as you go on. You don't have to be hitting the max $1,500 for the day and passing it in 2 days. Probably end up blowing more accounts than you will passing them. And that's something that I've been working on, is trying to structure the risk for these 50K accounts. I came in way too hot, way too aggressive on some of them, thinking it was going to work out. With just blowing a couple of them, and I haven't found that to work very, very well. So I'm thinking slowing it down just a little bit, not spending too much time, but slowing it down just a little bit to have a little bit more life out of them, in my opinion. I've also been having fun back testing and looking at swinging accounts overnight. That's proved pretty cool. Had a nice win on Tuesday. I just didn't get the entry that I was looking for yesterday. I was waiting for price to push up a little bit more, but that would have been wouldn't have hit the TP, I don't think, but it would have been a nice win for sure. So I'm gonna continue to do that. I'll probably end up taking higher risk swing trades overnight with the ones that I have in Tradovate, probably, just to try to pass them, because I'm ending up with too many combines, too many evals, with this moving to Top Step X and me buying new ones on that, and I won't have the time to trade all these, and I don't want to end up just YOLOing them for no reason or not passing them. But there's just too many accounts to trade. Anyway, I'm just kind of watching this, guys. I'm not ready to jump in right here. Obviously, everything is telling me long. This is a bullish day. We're up above prior day high and pre-market high by a long shot. We've really continued this move up. I was almost expecting like an end of day kind of run back into pre-market high, but we've pushed up really, really nicely. We've continued this bullish move. So it would be tough for me to say I'm ready to take a sell unless I'm going to try to catch the top, like top ticket, as they say, which I'm not a real big fan of doing. Right now would be the time. It's kind of giving that indication. We don't have massive stacked imbalance or anything like that on TradingView's footprint chart. But if I was going to try it, now would be the shot. You wouldn't have that much, you don't have to put on that much risk. It would look something like this. Get rid of the magnet tool. Something like this, maybe 20 ticks of risk just above these highs in case he wants to come and check it out again. And you could shoot for a 2-to-1 back down towards this zone, something like that. I'm just not a fan of trying to catch the top and sell it on the way back in. It presents good risk structure, and you only need one to work out. You could take a couple losses and then a win and be at break even, but I'm just not a big fan of that. I was trying it over here and it didn't work out too well for me. If we get a pullback, I'm going to be looking for somewhere into this area right here. This is really my the only area that I have spotted on the 5 minute, something around that area, somewhat equal to what these pullbacks look like here. Maybe down near this zone, and then somewhat of a big bullish continuation up. Maybe we get a stacked imbalance to the upside, but this isn't looking fantastic for a trade for me here. Right, like here's prior high broken in the uptrend. We get that. We definitely got sellers stepping in right now, so the short looks appealing, short term. Here's your prior high broken in the uptrend. Here's the high that was broken there. This didn't push super far. This did. I got a feeling this is look at the way I've been trading ES and watching ES. It just doesn't pull back very far. And it just has these really nice slow trending movements where it just trails up and up and up and up, hardly pulling back. And then once it does pull back and start, it just keeps doing its thing. So this very well may just kind of trail up towards the end of the day here. Maybe we start to aggressively pull back. The only thing I see for an immediate trade is this short that I'd be looking at like that. 20 ticks and maybe something like a 40 tick take profit, but I'm not all in for that just yet. So we'll wait and see. Again, I want to talk about VWAP a little bit, just what I was looking at on the chart here, how I saw this over the last couple days, and really how interesting it's been to watch that volume tool, and then Forex Factory. No, not trading ICT. I inverse ICT, man. Whatever the opposite of ICT traders are doing. No, I'm just kidding, man. You can trade ICT, trade whatever you want. I just think that whole ICT cult is funny. And personally, I think it's extremely overcomplicated. Yeah, I don't think that much chart markup and work provides any kind of additional edge. I don't. If you understand the market that way, and you watched that stuff, and that's how you mark your charts, that's fine. All good. Good evening. Good to talk to you, bro. I take 2 trades, make profit, and then another trade, loss. This happens every time. Some advice. Yeah, man. Were your 2 trades bigger than your loser? That's the question. First, Liberator. Because I remember talking to you earlier about on one of the previous lives. Were your 2 trades larger than your loss? Because if you're trading with a positive risk to reward like this, for example, or even just something, where it's a little bit bigger than your loss, your 2 wins should greatly outweigh your loss. If you're ending up taking trades like this, where you take your profit here first, and then you take your profit here again, and then you sell again down here, and the trade runs against you, and you just don't close it out, then you're really shooting yourself in the foot. So that would be the question I have for you. Are your wins bigger than your losses? Again, guys, I'm not in this trade. I'm just I'm doing like a visualization here. This is the only thing that I would see on the chart. It doesn't really fit the bill for me. I'm trying my best not to be too overly aggressive with these accounts and just disrespect them and not pass them, really, because that's what happens. YOLOing them, you get lucky, but that's like, it's not the good way to do it. But yeah, let me know, man. King Cams, what's up, man? Good to hear you. I know Mario's in here somewhere. I'm sure the rest of the boys from Discord are in here. Vin, if you're in here, what's up? Bruce Lean, if you're in here, what's up? Alpha Spark. I'm probably gonna have to change all your guys' names from all these silly Discord names to actual people's names. But everybody's got a cool story behind them. Dude in Discord, Hydro Farmer was talking about being a farmer today before trader, so that's cool. If you're in here, what's up? Shan, if you're in here, what's up? Good to have you guys back on. Yeah, I just don't know with this one, guys. 317. I don't know if I'm gonna really get a play on this. Again, I was looking at after this kind of trending move, maybe we saw something, that we come up here, kind of just taps this high, fails, and starts to trend back in. We break below, multiple levels that would say, okay, we're kind of shifting bearish. We would also shift bearish structure, and then we can kind of look to the downside. This, to me, gun to my head, I think it's going to run up rather than just pull all the way back down. But how do I structure risk on something like that? Here's what we talk about when we say, despite you having confirmation of a trend and maybe the direction, and you're following higher time frame structure and lower time frame structure, you have multiple different things on your charts that are telling you that price is going to move one way. Part of your trade and your setup itself and your entry should be how you're going to structure risk. And if you don't have a good way to structure risk on that specific price action, then it's a no-go. And in this instance, how am I structuring risk on this trade? I could go like this if I wanted to, right? I could go to the candle low that I'm entering on, but I don't have any low here to work off of. This is a nice target somewhere up into this zone right here. But unless price had pulled back and then started to give some kind of confirmation that it's moving up, again, some bullish price action, some market structure shifting to the upside, some nice volatility coming in. Maybe we get a nice stacked imbalance and a strong positive delta. Then we're looking to take a trade, and we could say, okay, we're entering up here with the momentum, and we get a stop loss just below this low, because if the trade's going to work out, we're trading on it, continuing moving in that direction. If it keeps coming back down, we want to be out of the trade. Right now, I would just be kind of buying this slight selling pressure after the push up right near the high, and my stop loss could go right below this price action, anticipating the move up with a very low risk trade, or way down here, because if this is going to maintain this nice bullish structure, price can do whatever it wants as long as it doesn't start to get below these levels over here, right? We could easily see that. That's fine, right? We could see, this is just a directional arrow. We could see something like this. We could even really see something like this. Maybe it wants to come all the way back down to the zone, tap into these nice VWAP lines that we were talking about earlier, and then continue its move. So having a trade with a stop loss that's anywhere in the middle of this takes me out of the trade before I think that it's completely turning down and that I would want to be short. I really wouldn't want to be short on this until we started to get below this level, or like the trade that I was talking about, really selling the top aggressively, the first sign of bearish price action and consolidation near the top after a nice extending impulsive movement to the upside, which is not really my style of trading. Sometimes I'll take it in a situation like this where I think I'm not going to get a trade for the rest of the day, and I want to take a trade, but they're not really high probability trades. They're low risk trades, but not very high probability. Excuse me. So I don't think I'm going to get one. That's what I'm getting with. What's your take on trendline breaks during NYSE Open? Yeah, go for it, man. Whatever works for you. I'm not a huge trendline guy. You probably haven't seen any trend lines on my chart. I pay attention to market structure in the sense of, if we were going to put a trend line on this chart, where would it be? But I'm not a big trend line trader. So, if you use it to structure risk and you use it along with some other factors, that's fine. But, in my opinion, you can kind of see where the trend line would be from price action itself, right? Like if you had a trend line drawn here, and we saw price action come down, break below it, maybe you take a break and retest off of where that trend line would be. If you want to mark your chart up with it, that's fine. Yeah, much choppier. And then Dow was on oh my God, man. Yeah, Dow went on a run today. The hell, man. Sorry, guys. Biting skin off my lip. 9:30 a.m. Yeah, Dow was just in its own world today. Decided to just go to the moon, which is one of the reasons I like ES over Dow. When swapping from NQ, which has been the favorite for me for now. Dow just kind of gets in its own world sometimes. This would have been great if you were trading Dow today and you were a bull on it. You could have pretty much taken a trade anywhere, as long as you weren't like right over here taking a buy, and you would have been okay. Massive move up from the Dow. It's definitely helping these guys out. Again, I'll leave this up here just to show hypothetically what I would have been looking at if I wanted to force a trade, something along these lines. But yeah, guys, I don't know that I'm going to get one. Taking it off of these highs and this structure over here, it really doesn't do it for me. This was the nice trade here. And then earlier in the day, when you had quite a bit more room to run, this looked like it was going to pull right back down to the zone, stay above all this. Maybe I would have been hesitant because we didn't make it all the way down to prior day high and pre-market high. But even if you were late and you said, oh, wait a minute, here's the move is taken off without me, you would have gotten a second chance right here. And here's your get in signal on the 5 minute. Same thing on the 1 minute. You would have had some nice bullish structure forming, and then again, really nice bullish price action to be taking that break and retest. So this now, to me, maybe we get the little trail down and capitalize on that, but I don't want to take it. I think there's potential for that impulsive move right around the 345, 350 time frame right at the end of the day, but probably just going to save it for an overnight trade and YOLO some of these. Not YOLO. Take a nice swing trade, but it ends up being fairly high risk because I've been keeping them on the minis. What I look at for the overnight stuff, I'll go out to the higher time frame just a little bit, and I'll try to take a look. Same structure, same approach. I'll try to take a look at where price may be heading. Usually consolidates for a pretty good amount of time after market after NYSE session closes. You're allowed to start taking trades with Top Step after at 6 p.m. Eastern. I think it closes at 4:10. Yeah, they shut trading off at 4:10, and you're allowed to start taking trades after 6 p.m. Eastern. So I'm thinking entering sometime between 6 p.m. and 8 p.m. Not too close to when I'm getting ready to relax and go to sleep. Wait for just a little bit of that price action, kind of decide where it's going, and then take the trade. Yesterday I was looking short. Here was price action towards that end of session, right? Like, what do we got down here? Yeah, here was 6 p.m. Yep. So I had a line marked up over here where I was going to take a sell with a stop loss above all this. I figured price might jump up here, maybe just take out these highs before continuing down, or at least just pull back up, give me a little bit better entry before continuing down. My target was initially, I think, way down here or below this low, but this would have been a nice trade had I just entered it at 6 o'clock, which I think I'm going to have to look at doing sometime between 6 and 8. It would have been a nice maybe 50 tick move I would have caught out of it. Same thing the day before. Where was 6 o'clock on this chart? This one worked out. I took this trade, and we looked at a sell here that pulled all the way down. Let me see if I could actually just pull it up and show you guys that one. Seven. Whoa, don't do that. Yeah, here was the trade. I widened out the I had widened out the take profit and stop loss. I think this at this point was at a 1-to-1. And I actually took this off before it came down. But if you look at the price action on the chart, it came all the way down. Here's the lows that we're looking at over here, and tapped that level below that target. So that ended up working out pretty nicely. But yeah, man, you can trade these indices however you want. Obviously, intraday and for NYSE session is definitely the move. But I've used to swing trade Forex quite a bit. It was funny right at the time that somebody was asking me, hey, are you going to be swing trading Forex anymore? Sending out analysis. I was right in the middle of finishing up some back testing and really making the decision to start forward testing, just trading it. I call it forward testing. It's really just trading it, and with just limited results to start. So keep you guys updated on that. Like I said, I'll start sharing those trades if I'm going to take them. Like last night, had I taken that one and gotten filled on it, I would have shared it, called it out in Discord for free, let you guys know what I'm looking at. You can grain of salt it because I haven't been doing that for a long period of time on one specific instrument and have a whole bunch of data that supports it being a very consistent approach. But I'm comfortable and confident to trade it because it's the same approach, and my belief is that price action is fractal, the way that it forms on different time frames. It's the same data. It's just forming price action and market structure just forms the same across different time frames. You could trade it very, very similarly. Obviously, you have to watch out for stuff like news overnight, speakers, data. You expose yourself to not being able to manage the trade, to actively manage the trade. So there's definitely some nuances and some risks. But Bruce Lean, what's up? Been playing with the Japanese index, trading the 15 minutes. Kind of lower liquidity, but it's volatile for Asian session. Gives some nice moves at 8 a.m. Eastern when Tokyo opens. Cool. Very cool, man. I'll have to take a look at that at some point. I got my hands full trying to focus on these 50Ks and finding a risk structure that makes sense and an instrument that it works really well on, but I'll take a look at that. I have a Forex account. Q, what's a good size to fund an account? I'm confident, but I think it's time to turn it up. King Cams, that's really personal, man. Honestly, completely up to you, as a trader. It's really, really difficult to say. So we've got stacked imbalance on the sell side here forming. It's early in the candle. This is probably not going to stick. But again, let's look. This was the 5 minute. Yeah, here was my little hypothetical that I'll keep putting up here just so we can kind of track to see how this would have played out. Hopefully it doesn't play out because I didn't take it. Yeah, completely up to you, brother. Honestly, first off, as you guys know, nothing I say is financial advice. I'm not a financial advisor. None of this is a suggestion or recommendation to do anything. Trading's risky. Most traders lose money. You're probably going to lose all the money that you intend to trade with. So all that being said, it's really personal, man. It completely varies and is based on the individual. From a risk management perspective, I would say number one, you shouldn't be putting all of your capital, like all of the capital that you intend to risk in the markets, whether it's through day trading, whether it's through investing, whether it's through, just any kind of investments, businesses. You shouldn't be putting it all into one account and trading that account. So it should be a portion of that capital. And then whatever portion you decide of that risk capital is, you should be risking a pretty small amount per trade. If you're trading a live account, it's again completely up to you. The rule of thumb that you hear is 1%. You hear guys say 2%. That's fine. Maybe you want to be more aggressive than that. Maybe you want to be more conservative than that. Maybe that risk capital is a lot to you and you do not intend to blow the account. Maybe it's 0.25% per trade. The way that you can start to get a feel and get comfortable with how much drawdown you could expect is with an equity simulator. I talk about that a lot. Google free trading equity simulator. There's a bunch of them. I don't know which one you should use. I don't have one specifically in mind, but whenever I want to mess with it, I posted it in Discord as well. I'll post one in Discord. You can mess with that. What it does is it allows you to enter your risk to reward, your I'll pull one up. We can do it on here because this looks like I'm not going to get a trade, guys. So we'll make this more of an educational session. We talked about a little bit about VWAP, just kind of how how interesting that has been to watch. Talked a little bit about price action and market structure. I don't think I'm getting a trade out of this, so I wanted to talk about Forex Factory. I had that up here. Let me see if I can get a free equity simulator up here. Is this the one that had everything in euros? Yeah. I think this is it. Let's say this. Just make sure this works. Yeah, okay, this is not bad. There's better ones than this, but just for the sake of the example. And let me know if you guys can't see something. YM was on a tear today. Yeah, it was on an absolute tear. So somebody asked in the chat, how much they should put into an account and that type of stuff. The answer to that question is it's completely personal, brother. I have no idea, what what different money, everybody has a completely different idea. We're in different areas of the world, really. We got people from all over here. So, $10 to me could be, $100,000 to somebody else, and it could be, 10 cents to somebody else. It's way ahead. So it's completely, relative to you. It's personal. That's why when we talk about how much money we make, it doesn't really fucking matter, man. Excuse my language, but it really doesn't. That's not going to display anything. It's about your risk, your reward, how much money you're making based on how much money you're risking. Because if you make $20 on $10, great. That means the same trade could have been 20,000 on 10,000. So you could always scale up. So focus on putting in however much money you're comfortable with. Again, not a suggestion, not a recommendation, not financial advice. Trading's risky. If you trade with live money, you're probably going to lose it all. I mean that genuinely. Trade on demo, first for a long period of time. Anyway, what I was focusing on here more is trying to understand how much you should be risking per trade and getting comfortable with what your drawdown, what your expected max consecutive losers, max consecutive winners will be, and whether or not it's profitable in the first place. So, for example, let's say you start an account with, this is in euros, but who cares? Let's say it's $100, right? You start an account with $100. You can put in this equity simulator, and you can mess with this yourself. I'm not affiliated. I don't know this site. This might be dangerous site. I don't know. So there's the disclaimer for that. You put in your estimated win rate. This is your win rate here. 50% is pretty good, right? At a 1-to-1 and 50%, you're break even. So if you don't go too crazy far from that, that at the baseline odds, flipping a coin and saying heads or tails and betting as much as you're losing, having your take profit and your stop loss equal distance away, less commissions and swaps and fees and everything else, you should be break even. You're doing better than most traders if you're break even. So increase from these levels slowly is my suggestion. Let's say you're shooting for around a 2-to-1 risk to reward, your win-loss relation. This is risk to reward here. They have it all in stupid terms, so maybe we'll look at a different one instead. 2-to-1 risk to reward. That's pretty standard, man. That's what we're going to shoot for on most of our trades. Maybe you want to go, 1.5 to be more conservative. That's fine. And let's say we're pretty abysmal. We're going to win 5 out of 10 trades. We're going to lose 5 out of 10 trades. This is just going to be the number of lines. You could leave it at 100. The number of trades, 100. That's fine. The number of lines is 20. So essentially what this is going to do, it's going to run a simulation with these 3 metrics here and this one down here, your risk per trade, to say if we have $100 to start and we have a 50% win rate and a 1.5 to 1 risk to reward, and we certainly aren't going to risk $250, we're going to risk, let's say, can we do a percent? Yeah, let's say we're going to risk 1%. It will give you a simulation. It will give you a bunch of equity curves for this specific set of data. You can hit the thing 20 times and you can see how profitable or how unprofitable this is. The important metrics that I like to look on here, expectation is pretty cool. Max drawdown is important to look at. That's going to be your out of all of these simulations, out of 20 different simulations of 100 trades for this number. Again, this is just random data. It's not random, but it's running a random calculation with this data, which is what you can expect in the markets. The worst drawdown on this set that we ran here is 12%. Gives you the dollar amount right here. The average max drawdown is 7.4%. So out of this set, if you traded with a 50% win rate, you risked 1% on every trade. You stuck to this strictly. A 1.5 risk to reward, you would end up with, on average, if you traded enough, a max drawdown around that 7.4%. It gives you minimum equity, maximum equity. It gives you return on max drawdown. I guess that's important, but not so important to me. This is the number that I really like to look at. With a 50% win rate and a 1.5 to 1 risk to reward, your max consecutive winners is 10. Your max consecutive losers is 9. And if you run this a couple times, you'll see that it doesn't, I'm looking at these numbers down here. You'll see that it doesn't stray too far. Maybe you get an anomaly where it gets some really bad runs. But you have to understand that how you're trading, what your actual win rate is, your average win rate is, your average risk to reward out of a large number of trades, you're going to end up somewhere around these metrics. This is the math behind trading. As you improve them, let's say you hit a 2-to-1, you held, and this is really average because this would be holding every trade to a 2-to-1 winner or a full stop out. You're never closing the trade early in profit or in drawdown. And your win rate is exactly 60%, and you're never changing that risk from that 1% per trade. Start simulation. You can see how much smoother and steeper these curves are, obviously. We increased our win rate and we increased our risk to reward ratio. You can see down here, your max consecutive winners goes up and your max consecutive losers goes down for each simulation. You could see the drawdown is still pretty steep. You could see the average max drawdown. But again, what I like to display here, which is important for guys to know, let's say we got a pretty nice metrics, right? And we average a 60% win rate and a 2-to-1 on our trades. That's pretty good in my book, man. That's like really good. You're a very profitable trader. Look at the equity curve, man. You're making money, big money. Out of 100 trades, you're going to be over double your money on average. Here's the average line. We started at 100. You can see it's over, the 200. Here's your equity. Here's your number of trades down here. But here's the important part to look at. Again, this is max, so it's not the average. Out of this set, right, that we ran here, doing everything correctly, never messing anything up, not closing something, your max consecutive losers on this set was 7. Maybe some of them come in at 6, maybe some of them at 5. That means at a certain point through 100 trades, you have to sit through 7 consecutive losers. I try to display this stuff when I'm trading live and I'm taking losses, or guys are worried about taking too many losses. They take 2 or 3 back to back and they want to change their system. They want to add something. They want to increase risk or decrease risk. Ask yourself, man, what are my metrics? Let me do a fucking average. Excuse my language. Let me do an average, man. Go low, whatever you think. Go through your data, go through your journal. If you're not journaling, this is way too advanced for you. And you should get a composition notebook and start writing down what trades you're taking and being able to go back through and take a look. But even if you don't do that, go into your broker data, go into the, if you're trading on a prop firm, go into the prop firm data and look at your win rate, your risk to reward. It should give you this. And look at how much you're risking per trade. Plug those numbers in here. Take a look at the max consecutive winners and losers and ask yourself a serious question. Maybe you don't even get 8. Maybe you get 5. We'll go low. Maybe you get, like, on average, it's going to be like 4 or 5. After 4 consecutive losers, can you trade the 5th trade, whether it's the next day or that same day? Can you trade it effectively? Do you really understand that out of 100 trades, you're going to have consecutive losers without doing anything wrong, trading really effectively, exactly like this with this data? You're going to have that many consecutive losers. And then on the flip side, you're going to have consecutive winners. Can you not let that get to your head? This is where all the psychology and mindset stuff comes in. This is stuff that I struggled with and stuff that I would say every trader struggles with, especially early on. After 3 or 4 back-to-back winners, 2-to-1, every trade is you're making double what you risk. Can you not take on more than that 1% that you're supposed to be sticking to? And when the next trade inevitably is a loser, you're risking 5% and you completely wipe out and then go into the red? That's the questions. That's the benefits of visualizing. I'm a visual guy. I need to see it in front of me. Using a free equity simulator. Again, you don't have to use this one. This is actually kind of crappy in my opinion. This is like not clear. They call stuff different stuff. So you can just Google it. But this is essentially what we're looking at. Utilize this to figure out how much risk you should be taking on per trade. Understand whether or not you're going to blow the account that you're trading. Understand whether it's profitable or not, if it makes sense. And really understand how much drawdown you can expect from that trading system, and decide if you're comfortable with that. Decide if you need to size down or if you want to size up. What happens when you size up, the ones that do really, really well, when you have really hot streaks, go really, really aggressively well, but you'll have lines that look really tough. Oh, with this numbers, it's pretty flat for a while, and then it just blows up. Some of them blow up. I see what we got going on here. Again, play with this on your own, guys. It's helpful. This is something that I really like to point out to traders, man. Mark Douglas is saying every movement in the market is unique, and there's a random distribution between winners and losers for any given set of variables that define an edge. I'm not reading that off of something. It's just ingrained in my mind from Trading in the Zone, his book. There's a random distribution. Let this one sink in. Between wins and losses. Random distribution, meaning it's not win-loss, win-loss. It's not win-win-loss, win-win-loss. It's random. Consecutive winners and consecutive losers for any given set of variables that define an edge. You're going to have to understand that, and you're going to have to sit with that and be able to trade through consecutive winners and consecutive losers without letting it mess with your mindset. Yeah, no pressure, man. Play with that. I mean, that's stuff to help me out. It really, really understanding this stuff. Everybody wants to know about the best indicator to use. Everybody wants to know, how do you trade? How do you pass the challenge? How do I make money? How much money do I need to make money? You're asking a lot of the wrong questions, because risk management is one of the hardest pieces here. Psychology is one of the hardest pieces here. Where to enter on the chart, technical analysis, yeah, man, it gets pretty advanced, and you definitely get better with time. You need experience, but it's not that hard. It's really not that difficult. You could learn the basics really quickly, man, really quickly, especially if you keep it stupidly simple like me. It's not difficult. Me explaining my charts, it doesn't take long at all. Why I'm entering a trade is it's not so complicated. The really difficult piece comes down to managing your risk and dealing with your emotions and your psychology. It's the boring stuff. It's the stuff that people don't want to talk about because they just want the holy grail that everybody's searching for. But showing you guys this, I really think, is more helpful than most other things that I could show you on this live stream. So I'm glad that we got a slow market. I could talk about it. Really enjoy your videos. Can I ask for your explanation with Top Step X? After 1 month, my profit will reset if I do not get the profit target. Dennis, to answer that question, you sign up for the Top Step account. You pay whatever that dollar amount is. Right now, it's $19 for a 50K account challenge, the combine, to start. You have 30 days to pass the account. Either you fail the account, you run it into drawdown, and you hit the max drawdown. You pass the account within 30 days, in which case you pay a one-time activation fee. It's $149. No more monthly fee after that. You're trading an XFA towards actually just making, qualifying for withdrawal. Or third option, you don't fail it and you don't pass it. Here are your options. Try to pass the account aggressively right before the rebill date, blow it, and then let it rebill, and it will reset to 0. Or cancel the account completely. You go into billing on Top Step and you cancel the account. This way you don't have the account anymore, it's gone, and you don't get rebilled. The third option is you let it rebill, you hit the rebill date, and you haven't blown the account. It doesn't automatically reset at 0. It just gives you another month to keep trading. So for example, let's say I have this account, it's $860 in profit, and the rebill date comes up. Nothing happens. I just get rebilled for the price of the account, the full price of whatever the account is, not whatever discount you got. That's how it works. So you got 3 options. Cancel the account out completely, aggressively try to pass the account, knowing that you have a rebuild date, which gives you a reset, you inevitably fail the account, because that's usually what happens, and let it reset at rebill because it's blown. Or you're in profit and you need extra time and you decide that that's the best move. Most of the time, personally, I wouldn't let an account just rebill. I think you're probably better off getting a reset from it, or just starting from scratch, closing it completely out and starting with a fresh amount of days to trade. Unless you were in profit and about to pass, it's probably the only time that I would let it rebill. And it doesn't automatically reset. It only resets at rebill if you've blown the account. It's a little bit confusing, so hopefully that explains it, man. Go on to Top Step, reach out. I don't work for Top Step, go on to Top Step, reach out to them, ask any questions you got. They got pretty good frequently asked questions too. yeah, man, no trade on this right now. Just hanging out, watching what would have played out. It's probably going to spike up at a certain point. If you got questions, ask them in the chat. If you're not in the free Discord and you're here, I don't know what you're doing, hop in the free Discord. Giving out 2 of these Top Step accounts. Actually, I'm going to give out more than 2. Let you guys in on a secret. I'm going to do more than 2. Multiple 50K Top Step accounts. No purchase necessary. Details in Discord. It's in a specific channel. Pretty easy. I don't have that many people in there, so you got pretty damn good odds of winning a 50K combine that you can try to pass. Top Step's also giving out resets like candy, man. I got another one today. I got one last week. They're giving out resets for these accounts a lot on their live stream. I call that out in Discord, so you guys don't have to watch it so crazy. I try to make it easy for you, make sure we're all getting as much free stuff as we possibly can, man. So, real quick, I keep getting asked about news. I post this stuff every morning, and then I describe how the stuff that I'm looking at on it. And then, sometimes I talk about managing risk, and I'll do that now briefly. So this is the site that I use, forexfactory.com. When you come here, this is the first thing that opens up. It's their news site. It shows you the day. It usually shows it in your time. I'm assuming I'm in Eastern Standard Time. Then it gives you a list of news and financial events and holidays for that day. If you hit filter, you'll see the different folders, 4 different folders. This is holidays, in which case the market's closed. It's important to know about that. If you're trading a U.S. indice and it's a holiday, you should probably know about that. Sometimes I filter for yellow because these are not very important events, and it just cleans the chart up. High impact, medium impact. This is the one we really want to be paying attention to. You could almost bet that when there's a high impact event at the time of that release, you're going to see an increase in volatility. Almost always. You'd be hard-pressed to find a red folder event where you didn't see a slight uptick in volume and volatility. Which way it's going to go, out for debate. We'll talk about that after. Medium impact, maybe not as much impact. And red folder, some of them impact the market very heavily. Some of them don't. Some of them are kind of duds. Sometimes you get a big running move that creates a trend. Sometimes it's a wick up and down. Different movements every time. Yellow, not so much. If there's no red folder events, like we were pretty light today. Maybe you want to know about the FOMC speaker, that's going to talk at 2 p.m. and maybe he answers some questions and, it impacts the market in a certain way. It could be good to know about that. But for the most part, we're looking at red folder. If you want to filter it and make it clean it up for yourself, take the yellow folders out. Just look at the red folder. If you're trading Forex, obviously you want to know about all of them. For U.S. indices, it's good to know about big red folder events for even for the GBP or Euro. If Bank of Japan is doing something, it's okay to know about that for sure. It has impact all across all markets. USD is obviously the big one that we're looking at for our U.S. indices. If you're trading NASDAQ or Dow or S&P, you want to know about unemployment claims. A couple notes outside of the obvious. It tells you what time the event is. You can mark it on your chart. You can be aware of it. Each one is going to have a different impact. Unemployment claims, while it's a red folder event, is not as big as NFP, non-farm payroll, and not as big as something like the FOMC rate and then Jerome Powell at the FOMC conference. Nothing on here is going to rank them for you, but if you watch it for a month, 2 months, 3 months, you'll get very comfortable for the really high impact stuff. And if you hop in my free Discord, I'll tell you about when the really high impact stuff is coming up. I'll post this chart every morning in Market Insights, and I talk about it, and I tell you what we really want to be watching out for, and some of the stuff that maybe we want to be paying attention to. Like I said this morning in Discord, we've got 8:30 a.m., and I said the other thing we were looking at is potentially these speakers because they've had a little bit of impact in the market. I talked about this speaker. Another note that you could use on here. Questions on this always are, well, which way is the market going to move? How is the market going to move? I want to know about that rate, and I want to see if it's expected. If you click on this, it gives you a drop-down menu. It describes the event. It shows you the forecast, shows you what it came in previously, shows you the amount once it drops right here, the actual amount. Here's my non-financial advice, the way that I approach news. I never try to anticipate. I never try to, first off, even understand what the data that's coming out is. I don't care. I'm trading technical analysis. I'm not trading fundamentals. I really don't care. It's way too much to bother yourself with. trying to create a why behind price action is happening. I don't try to watch this chart and then immediately place a trade based on the news. In my opinion, you're never going to be fast enough. Never. And even if you are fast enough, you're never going to get it right, because I've watched it a bunch of times for years. And the way that the market reacts to the news is not always the way that it should react to the news. The market's irrational. It's driven by people. People are irrational and unpredictable. You don't know. Sometimes the data comes out positively, and that should cause the currency to go down, and instead it skyrockets up. So in my opinion, it's a loser's game trying to predict or interpret the news fast enough to place a trade. Here's what you can do. 1, decide not to trade. Know there's going to be an increase in volatility at that time. Try not to have a trade on the market. If you do have a trade on the market, trade in on the market. Decide how you're going to structure your risk for that increase in volatility, whether or not it's going to go up or down, or how much it's going to go up and down. You can bet on a 1-minute chart at 8:30 a.m. We'll go back and look at this, that the 8:30 a.m. candle was significantly larger than all the other candles prior to it. Let's go take a look. What do we know here? Here is 9:30. Here is the 8:30 a.m. candle. Big surprise. Look at all the candles before this. Look at the price action. Look at 8:30. Big push up. This could have just as easily been a push down. Now, let's say you're in a buy trade over here because you saw a nice uptrend and somebody posted this in the group. That's cool. They took some fair value gap looking model that was a buy trade, pushed up, picked up liquidity. They had a really nice analysis done. Looked clean, man. If you're on here, more power to you, man. That looks sweet. Maybe you went with something like this. You saw, maybe you did something like this. You saw price retrace. You saw start to push back up. You saw a small break of structure on the 1 minute after it came back down, failed to break these lows, and you wanted to get into a long, whatever. Maybe you had your long down here. Recognize that news is coming out over here, and 1, understand and accept that you're taking on an increased amount of risk. If your stop loss is based on this price action and structure, you're about to get hit with a lot more volatility. You can leave your trade on how you see fit and just let the odds play out. If you're going to trade through news all the time, you'll probably end up with an even split over a large number of trades that work in your favor nicely or don't work in your favor. Understand that you can get slipped if this goes against you. You can experience a worse fill, especially in the Forex and CFD market, as spreads widen out and price blasts through your stop loss and fills you at a much worse price. In the futures market, honestly, I really personally haven't experienced really bad fills at all. It's been super spot on. I don't know if that's normal, but I'm just giving you my experience. You can widen out your stop loss and take profit, knowing that there's news coming up, and maybe that you want to be able to withstand some volatility and continue on in your trade. Let me give you another piece of info. They don't always play out like this. If you scroll back, honestly, even more common, you see a big wick up and down first. Price action gets real big and then it moves in whatever direction. Sometimes it moves in a direction and then comes right back down the other way. Big volatility. So again, you can not trade it. You can trade it the same way, but just accept and know the risk is there. What's about to happen at that time frame. Don't trade blind. Be aware of what's going on in the market. This is easy to check every day. You can widen out your stop loss and reduce your position size considerably to account for that wider stop loss and trade the bigger price action. That's really the one that makes the most sense if you want to stay in. If you want to intentionally trade news, that's cool. In my opinion, you have to enter before the news. Any stop orders that you place above and below and try to catch the move, it almost never works out. You get a bad fill. You can get filled on both of them and stopped out quickly. I've never seen it work out. Try it in demo. I encourage you and see if you can make it work. And then even if it works in demo, it's probably not going to work in a real environment. But let's say you wanted to go long right before the news. You probably want to widen out that stop loss, and maybe you don't set a TP. If you were going to intentionally trade news, which I don't recommend really that anybody does, you widen out that stop loss, you reduce position size, and maybe you don't set a TP because it's going to run some unexpected amount. And if you catch it in that direction, great. That is my info on news. Another quick tip, and then I'll wrap this session up. How much is it going to impact the market? You're never going to know exactly. You can start to get a feel by looking at the historical times that it happened, the times in the past that it happened. So let's say we came here and it's 7:30 in the morning. You go, oh man, unemployment claims is coming up. I got a swing trade on from the last night. This could be me. And it's in profit, and I think it's going to continue that way for the day. The pre-market trend looks really good. I want to stay in this trade. But I know news is coming up, so let me figure this out. I can come over here to unemployment claims and I go, shit, man, I don't remember the last unemployment claims. How much did that really move the market on a 5-minute chart? What can I expect out of this? You can go back in time in TradingView to May 2nd and look at the last time this came out. It's almost always at the same time. The news event is almost always at the same time. If you go to 8:30 and there's no news event, maybe you need to do just a quick Google and look at when the last time it came out was. But you could almost always go back in time right from this chart, look at the last times that specific news event happened, when the last one was, and look at how much it impacted the event. And you could also look at, here's what was previous from the previous one. Here's the data. If it's a data event, they're not always data events. Look, this is Governor Bailey speaks. Maybe on this day he hardly said anything. Maybe on this day he said we're going to go to war or something. So who knows? But for data events, at least, you can still go back on this and look and see how much it impacted the market. But you got an additional factor here, additional piece of data to utilize. You could look at if the actual amount came in above or below the forecast amount and see how that impacted the market. You could take a look at whether the market moved up or down based on that. You could take a look at how much it came off of the data above or below and how much that impacted the market. And you could decide about how much volatility you can expect on a very rough scale, because again, each one is very different. This, for a complete beginner, is probably a good thing to do. Get an understanding of news, understand how it's going to impact the markets. Once you've been doing it for months and years, you start to understand, hey, man, NFP's coming up. That's a pretty big news event. It's the biggest news event that most people are expecting. I probably don't want to have a trade on for this one. I think I'm going to stay off the 1-minute chart right now and not have $1,000 on my XFA running. So just again, quick tip, piece of info. You can go on Forex Factory. You can use this in a pretty detailed way. You can go back in time quickly to April 25th and look at the 8:30 a.m. candle and see that the news came in, at 207 when the forecast was 214, the previous was 212, and see how that impacted the market. And then say, okay, well, it moved, 50 ticks, and the candles before it were around that 10 to 15 tick range, and I'm gonna structure my risk that way. ForexFactory.com. You can utilize other sites. This is the one that I use. This is the one that I've seen almost everybody in the Forex world use. That's how I got stuck on this one, but it's helpful, man. You can look at more days if you want, and you can look ahead and see what's coming up. But I suggest you check it every morning. Be aware of what's going on, especially red folder for USD. Decide how you want to trade. Go back in time and trade it in replay mode if you want. Look at how they impact the market and go from there. Honestly, for the most part, if I have a trade on, I'm usually tempted just to leave it. Sometimes decreasing my size, like scaling out and widening my stop loss so I don't immediately get stopped out. But the way that I interpret market structure and price action and how the market moves, it's kind of going to do what it's going to do anyway. When you throw TradingView in replay mode and trade through a couple months of data, I'm not checking the Forex Factory chart, and I'm not adjusting my trades based on whether or not there's news. I'm kind of just trading through it. And sure, when you're back testing, all of a sudden there's a huge candle. You go, oh, that was probably 30-year bond auction that day. But you end up with a data set and results from that back test trading through news without adjusting. So there's an argument that to be made that you should just trade through news, that way. But you can decide how to handle this either way. So I'm just giving you my input on it. Again, when I'm trading NYSE open, if there's news at 10, if I'm not already in a trade, I'm probably not entering one intentionally at 10 o'clock unless I'm trying to YOLO account or something like that, for fun or whatever. I got to pass one before the rebuild date. But the market's going to do whatever it's going to do. News kind of just makes it play out faster. It just really amplifies that. So that's my 2 cents on how you can handle news. I think it's a loser's game trying to predict whether it's going to go up or down. I really do. I don't think it's helpful to try to do a whole bunch of research on fundamentals unless you're going to do that for every trade. So here we are. I'm glad I didn't take this trade because look at how that one would have worked out, guys. Would have got stopped out. Didn't come back down towards the VWAP line. Didn't come back down towards the zone. It actually just continued to trail up. So a buy here with a stop loss right in the middle maybe would have generated, about a half an hour risk because I would have at least had a stop loss way down here. So not a good trade either way. Not a massive trading opportunity. Maybe if you zoomed in really, really tight and you went super aggressive and you caught something down here like this, it would have played out nicely. But, if you watch, most of my trading really isn't done that way. If we look at NASDAQ, was on the 1 minute on NASDAQ pretty aggressively. This would have just chopped me up. Whole lot of nothing. Maybe you would have caught some coming down into here, a sell here and then trailing down, maybe, but I get stop loss to break even. This would have been problems. This would have been problems. This definitely would have been a problem. So just choppy price action at the end of the day. A lot of times just better off not to get involved. If you had a runner or a trade running along, let it go, do your thing. Again, I cut mine pretty early this morning. Looking back on it, I watched price action about that 3-to-1 without the ability to scale out. I figured, you know what, let me build the buffer. But I could have let that one run all day, and it would have been a much bigger winner. So there's decision making to be done there with every trade. But that's pretty much all I got, guys, for the time being. Perfect explanation. What's my strategy? Let me take a sip of whatever this is, and then I'll tell you about my strategy. Since we've been on here for about an hour, hour and a half, my answer to what my strategy is going to be go back and watch 1 or 2 of the live trading videos that I have on YouTube. You'll find out, you'll watch me. You can even watch the beginning of this one once I jump off. You could watch me describe how I mark my chart up, the technical analysis tools that I use to trade. And then when you have questions, man, hop in the free Discord and ask me questions. That's going to be my response to that, rather than keeping everybody to explain the same thing that I end up explaining on every video. But I appreciate you being here, man, and appreciate all you guys being here. Hop in the free Discord. Got a community going, growing super fast. We added like 80 members in only a couple days. I'm building the 80. Man, we're growing more. It was 80 earlier before, a couple hours ago. 87. Nice, man. I'm doing my best to build the best free futures trading Discord, best free futures trading community. Live trading like this, live educational sessions. This is really not live trading. Educational sessions where we're talking about equity curves, structuring risk, how we approach news in the markets for free, doing giveaways. I got multiple 50K Top Step eval accounts up for grabs, no purchase necessary, for free in the free Discord. Link in the description of this video. Ask me questions, share your charts, talk to me. Happy to help you guys out as best I can. Sharing market insights every morning, focusing on specifically financial news for that day and things that might impact the market, as well as calling out any discount that I possibly can. Top Step had a fire drill today. If you were in my Discord, you got alerted yesterday that one was going to happen. You got alerted this morning that they were going to do one when they said they were going to do one. And then I sent the form twice to tell you. So everybody should be up $150 on a free reset from Top Step because I took the form from their live and I sent it into the Discord for free. I'm going to do my best to do that. I'm not always watching the lives, but I'm trying to put you guys on as much free stuff as I possibly can. I want that stuff. It's helpful. I've got 2 now from them. I've used one already. One last week, one this week. They're worth $150. If you're trading a 150K account and you got to reset it, it's $149. They do a handful of different giveaways. Top Step does on their live. I'll do my best to alert you guys. And yeah, outside of that, just a community of traders, helping each other out. I moderate it. I'm going to do my best to continue to moderate it. Nobody's going to get on each other. Nobody's going to be disrespectful. I'll kick your ass out real quick for disrespecting anybody, including yourself, man. We're all on the same team. We're all trying to make money. Yes, the market is somewhat of a zero-sum game where if I'm making money, somebody else is losing money. But there's enough fish in the sea for all of us to make money. That's the way to think about this, guys. Outside of that, I think that's pretty much all I got, man. I'll see you boys in Discord. Today's Thursday. We'll try to get a little live in tomorrow. We'll see what the market's looking like. If you want even more help with your trading, you want to work with me directly in an intensive 4-week program, jump in the free Discord. Make sure you like the environment. Make sure you watch some of my lives first, and then book a 30-minute call with me for free. We'll talk about your trading. We'll talk about where you're at, your experience, how you're trading now, where you want to go, and see if working together live through Zoom multiple times a day in a small and focused group and on one-on-one calls, working through your entire trading plan, developing your strategy, journaling together, improving your trading, your mindset, your risk management, everything that goes into profitable trading in a non-financial advice way. If that's something you're interested in, I've got an outlet for that as well. If not, and you say, I'm dead broke, brother, I'm trading demo, hop in the community, man. And hopefully you can trade on demo for a little bit and start making some money on demo. So this one was fun. I'm glad we got to do the equity curve simulator and news. I'll probably update the title of this one and post it in the Discord, but I will see you guys in Discord, and I'll see you guys tomorrow. Have a good night.